This video we'll be going over IRS Form 8826, Disabled Access Credit. This is a tax credit that's generally available to small businesses to provide or to spend money on providing access improvements for certain people in compliance with the Americans with Disabilities Act. So this can be a wide-ranging set of expenditures, anything from providing interpretive services for deaf and hard of hearing people to providing visual access for visually impaired people, providing any kind of structural access improvements to your workspace or to your place of retail. So there's a lot that you can include under this umbrella, but there are a couple of key things to remember. Now, I'll take a pause here and point out that this form is fairly straightforward. There's only 8 lines. We will go through them. The devil in the details really is on the back, where we have to kind of closely define what an eligible small business is, what eligible access expenditures are, and what a disability is. So we'll go through that for a few minutes, and then we'll circle back and walk through this form step by step. So for purposes of taking this tax credit, an eligible small business is any business or a person that had gross receipts for the preceding tax year that did not exceed $1 million, or the business had no more than 30 full-time employees during the preceding tax year, and that business elects by filing this Form 8826 to claim the disabled access credit for the tax year. So to further clarify the definition, gross receipts are reduced by returns and allowances made during the tax year. Employees are considered to be full-time if they're employed at least 30 hours per week for 20 or more calendar weeks in the tax year. And all members of the same control group and all persons under common control are generally considered to be one person. So for business owners that need that further clarification, you can find that in the back on the form instructions. Now, the definition of eligible access expenditures is a little bit more broad. These are expenditures that are incurred by the eligible business to comply with Public Law 101-336, that's the Americans with Disabilities Act of 1990, as in effect on November 5th, 1990. So examples of eligible access expenditures can include amounts paid or incurred to 1. Remove barriers that prevent a business from being accessible to or usable by individuals with disabilities. 2. To provide qualified interpreters or other methods of making audio material available to hearing impaired, technically deaf and hard of hearing individuals. The hearing impaired term is straight from the form instructions. 3, to provide qualified readers, taped texts, and other methods of making visual materials available to individuals with visual impairments. Or 4, to acquire and modify equipment or devices for individuals with disabilities. So all of these eligible expenditures do not include expenditures in one above, which is removing barriers for any facility that was first placed into service after November 5th, 1990. So qualified expenditures would be retrofitting an older building that was built before November 5th, 1990 to provide compliance with the ADA. And the technical definition of an individual with disability, according to the IRS, is an individual with a mental or physical impairment that substantially limits one or more major life activities, a record of having such an impairment, or being regarded as having such an impairment. So, with that said, I think we can kind of go through this form, and we'll imagine that our hero, John Smith, is operating his business and so based on that guidance that we just discussed, we'll just imagine that Mr. Smith spent $12,000 during the tax year on eligible expenditures. Now, we'll put that amount in line 2. It's incumbent on every taxpayer to keep accurate records and to define for themselves what eligible access expenditures are. So if you're not clear on what would constitute an eligible access expenditure, then you should talk with your accountant. So there is a floor for this. You must spend at least $250 in a given tax year before your first dollar of credit is applied to lower your tax bill. So we're going to subtract that $250 from this amount, and we're left with $11,750. Now, we'll put that in line 3, and then we'll compare that to the amount in line 4, because the maximum amount that you can claim for the tax credit would be $10,000 after the $250 floor. So we're going to enter $10,000 because that is the most that we can claim, and then we're going to multiply that $10,000 by 50%. So this tax credit is a 50%. So for every $2 you spend, you receive a dollar tax credit. This is a tax credit is a 1-for-1 reduction in your tax bill as opposed to a tax deduction. It is important to note that if you had an expenditure that you're claiming a tax credit for under any other program, any other type of tax credit, you cannot then claim that same expense under the disabled access credit. So that would be considered double dipping, which the IRS generally frowns upon. So if you spent $10,000 to retrofit a building that qualifies under a different tax credit, but then you spent a separate $10,000 on structural improvements specifically for enhanced ADA access, that would be fine. But if you spent $10,000 that qualifies under another tax credit, and then you happen to try and use that against, to offset or to claim a disabled access credit, you would not be able to do that. In line 7, this is for individuals that might be reporting disabled access credit from partnerships and S corporations, if there is any. For our instance, this is a business, Acme Enterprises. So the only access credit they would have is what they spent, or if they were an owner in a partnership or S corporation. For this example, they are not. However, if you are an individual filing this tax return and your only tax credit happens to be from this, like you did not personally spend any money that goes on Form 8826, then you can actually claim that credit directly on Form 3800. And we'll talk about where on Form 3800 you would claim that credit under line 8. So in line 8, you will add lines 6 and 7, but not an amount that exceeds $5,000. That's the maximum amount of this credit that you can claim in a given tax year. So for partnerships and S corporations, you would report this amount on Schedule K. All other taxpayers, you report this amount on IRS Form 3800, which is the general business credit, Part 3, line 1E. And again, if you did not have to calculate the credit up here in lines 1 through 6, and the only disabled access credit is from your K1 as reported from your partnership or S corporation, then you don't need to complete this form. You can simply take that number from the K1 and report it on Form 3800 directly. So if you have any more specific concerns or points of clarification, there are some instructions on the back. You can also refer to the ADA. There are plenty of resources that help people understand what types of expenditures have been claimed for this tax credit in the past. You can simply go to ada.gov. There are a lot of resources there for business owners that are looking for ways to make access improvements based on the types of clients, customers, or employees that they're trying to accommodate. That's all we have for this video. If you want more detail about how to complete this form, simply go to our website, teachmepersonalfinance.com. From there, you can type in IRS Form 8826 in the search bar, and you can find the article that we've written specifically on this form. So if you like our articles, please subscribe to our newsletter. If you like our videos and want to continue receiving them and watching them, please subscribe to our YouTube channel. And as always, if you have any questions or comments or concerns, please post a comment in the comment section or send me an email. Thank you very much and have a great day.